Hello, and thanks for joining us today on this webinar where we're going to spend about 45 minutes together and go through some incredible information that, depending on where you're at in life, may really change things around for you, may change your present, and may change the direction you're going in your future. The business world is changing very, very quickly, and there's some things happening in the world of currency that I think may knock your socks off. So let's jump right in. To start off, what I want to do is I want to share a little bit about who I am. My name is Doug Loewen. This is my family. We used to refer to ourselves as the Super Seven, but this last summer, my daughter got married, and now we're eight, so we have to come up with a new name. But this is a blended family, and some of you may be familiar with that term. Generally, and what it was for my wife Lori and I, have been married 11 years now, is it took a lot of pain and hard times in order to get to the state where we found each other and created this beautiful family. I through a lot of the pain that I've been through, personally and business-wise, I've really developed a very, very big passion for freedom. And there's a real theme of that in my life, just a desire to teach people how to avoid bondage and being in chains, and instead reaching for freedom. And I think oftentimes when people have tough times, they desire that even more. And when I look at my years between 2012 and 2017 in business, there were some real challenges in those years. And from that, I actually started 2017 really focusing heavily into cryptocurrency and developed some pretty good success. But last summer, I call it a concussion, because I might as well have hit my head really hard, and like I was starting to act irrationally. I took all of my crypto and I put it into another business that did not move forward. So this last fall, I started from scratch, and I share that with you because some of you may feel like you're coming to the game a little late, and what can you really do in the next 6-12 months? Well, for me, in the last 6 months, I've experienced an absolute explosion in what I've been able to build. And that's meant to share as an encouragement to you who may just be getting started and wondering, what are the possibilities? Well, the possibilities, because of the amount of growth in this sector, are very, very, very big. So before we jump into really talking much about crypto today, I want to go through with you for about 15 minutes, give you a picture of what's happening in the economy. Now, I am an extremely optimistic person, sometimes to a fault. But I may come across as a bit of a pessimist, but I like to think of it as being a realist. But it's really important to really appreciate the timing of where we're at in the world of cryptocurrency. It's important that you understand what are we facing. And some of these things you won't really know through the media, the traditional media, because a lot of the really important things that are happening economically, the media doesn't really focus on. First off, we are on the brink of war. Whether it's Russia, Syria, North Korea, the Middle East, there is tension, significant tension, which is oftentimes, when that happens, turns into massive economical, concerns. Country debt. Did you know that right now there is more country debt than ever before in history? And the U.S. is a good example, and I share a lot of U.S. examples. Because the relationship between U.S. and Canada is so close that what happens in the U.S. affects Canada very significantly. In fact, oftentimes people have said before that when the U.S. Sneezes, Canada catches a cold. Well, right now the U.S. is on life support. So what does that mean for Canada? So I share a lot of examples. So the U.S., when it comes to country debt, their debt load in 2016 grew 5 times faster than their economy. If you thought of that as a family, that would be devastating. But here's a Canadian example: is our debt load hit 1.4 trillion between federal and provincial debt. And the existing government, we're not going to talk politics much here, on this show, but the existing government expects to have the budget balanced by 2045. That's 27 years away. That's pretty bad. Right now, they're spending $63 billion per year in interest payments, because rather than controlling the debt themselves, they have private banks control the debt. Okay, so that's very, very wrong. They're not using the Bank of Canada the way that they should be. But $63 billion a year is the same amount that is spent on education. Okay, so that's pretty significant issues. Personal debt is higher than ever. Major banks globally are teetering on the edge of insolvency, and we're going to talk a little bit more about the banking institutions and why that is such a threat to each one of us. Central banks are also on the brink of collapse. And the best example of this is the Federal Reserve in the US, because the US right now, they still are holding on to the position of having the world reserve currency. Well, the Federal Reserve that controls that currency is neither federal nor does it have reserves. So the name is a complete and utter joke. But they are on the brink of collapse. They right now are determined that they are insolvent. Currency wars. You know what? China is very, very good at manipulating their currency because they want to do lots of trade, right? And that's why we can buy products so cheap from China. It's not good for their country, but you know what? That's what countries do. They manipulate their currency. Well, that causes political tension, and political tension is at all-time highs. There's, between different countries. It's awful what's going on out there, and the collapsing dollar. Well, when there's currency wars, what happens is the dollars get inflated. These countries, and again, the Federal Reserve prints and prints and prints and prints and prints. They call it quantitative easing because it doesn't sound like a dangerous term. But what happens is they drive interest rates to the basement. They print out the yin yang, and then the dollar collapses. And right now, we've lost over 95% of the value of our dollar. So our dollars buy less and less over time. We're going to talk a little bit about baby boomers and just how the shift in baby boomers is just driving, it's going to drive the economy even further into the basement. Job disruption, that's another actually great example. If we look at, the statistics show that 40% of today's jobs will no longer exist in the next 10 years, just because, technology is driving so quickly, whether it's, fast food self-ordering, we no longer need to order from a person, or self-driving trucks. The day will probably come where we won't need truck drivers. So I share all these things because if we look at, and I want to draw a parallel to Japan. Japan, they were a powerhouse country back in the 70s and 80s. And today they have endured decades of economic and social turmoil. Give you an example. The prisons are full of elderly women that are committing petty crimes so that they can go and have a place to eat and a place to lie down, a bed. Young families have not been having as many children, so there's a smaller tax base and, less are paying into the pension system. So because of everything that Japan did back in the 70s and 80s that caused today's long-term social and economic problems, well, this is exactly what the West is doing right now. Printing money out the yin-yang, keeping interest rates too low, inflating asset bubbles, going into way too much debt, and acting like the good times will last forever. So what I'm saying is that the financial tsunami, most people in the West bury their heads in the sand and care not to think about the future and just what all of these signs that are so clear are pointing towards. Well, I am thankful that each of you are watching this webinar because it's showing that you want to get informed and get knowledge and make wise decisions. Because during financial tsunamis like this is what happens. The wealthy are positioned to create more wealth because they've got knowledge. The poor remain poor, and the middle class are completely wiped out. So my question for you as we get started is, where do you stand? Will you be wiped out during a tsunami like this, or will you not only survive in it, but thrive? So let's look at money. And it's really important to understand exactly what money looks like. If we look at, the dollar. So this is what a stack of half an inch thick of $100 bills is $10,000. Well, in the 80s, here's what $1 million looks like. When the government was talking about the size of their money problems, they talked about in the millions. Well, then suddenly now in the 90s, they started talking about it in the billions, and this is basically 10 pallets full of money. Still not an enormous amount of money. It's still easy to correct a problem like that. But for the last 20 years, they started describing money like the trillions, and that's this tower of money right here. So that should be a very, very scary thing, because it's not just changing the couple, letters on the beginning of a number, billion to trillion. Next is quadrillion. How many that would be 1,000 towers of this money, right? So important to understand that, because when we look at what Warren Buffett, or some people like to refer to him as Warren Buffet, but he refers to weapons of mass destruction, which is derivatives. And derivatives are basically when you're not investing directly in the commodity, but you're directing in something that is derived from it. An option, a swap, a futures contract, warrants. Those are different examples of derivatives. Well, the derivative market is much larger than the whole U.S. money supply, larger than the world GDP, larger than the total value of the world stock and bond market. It's over $300 trillion in the derivatives market. So why is this important? Well, if you remember back to the Great Recession, so this is what happened in the fall of 2008, well, it's really the derivatives that took down Lehman Brothers. And Lehman Brothers declared bankruptcy in mid-September, and they only had a $35 trillion derivative exposure. Yet this was the largest bankruptcy in history. 25,000 people lost their jobs, and it triggered way more devastation than that. Well, here is what JP Morgan Chase looks like today. They have 75 trillion in derivative exposure, yet only 2.5 trillion in assets. So these towers of money, there's not 75 here, but that's what it would look like. 75 towers of this money, that will be the derivative exposure that JP Morgan has today. So why is that important? Well, again, Lehman Brothers had less than half of that. So has the problem been addressed since the Great Recession? Not a chance. What the government and banks have done is they've used a Band-Aid treatment. They have not healed anything at all, and they've just pushed the problems off to the future generations. That is a problem. That is a big, big problem. So here's some concerns with the banking system. If any of you are familiar with what happened in Cyprus about 4 or 5 years ago, one morning, people woke up and the banks weren't open. What in the heck, right? I mean, banks, have you ever gone to your bank on a business day and it wasn't open? Well, after a few days of the banks being closed, they reopened. People lined up, right? They lined up because now, they're needing to get into the bank, get money out, pay bills, whatever. They've lost a little bit of confidence. Well, when they got to their accounts, they found that up to 40% of their accounts were drained. So what happened? Well, the banks legally took funds from their account to cover their liabilities. Okay, it's called a bail-in. And I'm going to explain to you why this is so important. I mean, why in Cyprus does it matter? Well, this is what Forbes wrote just a few years ago, and just after in 2011 when this happened. They said this is a new strategy that has been unveiled around the world with a first test run in Cyprus. At first glance, the bail-in resembles the normal capitalist process of liabilities restructuring that should occur when a bank becomes insolvent. But equity investors and most junior creditors, lose everything. The bank cannot remain or can remain in operation and does not have to liquidate any of their assets, and no public money is required. So in the US, when the banks became insolvent, the government bailed them out and taxpayers took care of it. Okay, well, that's not a great solution. But in this solution, instead of taxpayers taking care of it, the depositors take care of it, and they lose a good chunk of their deposits to cover the liability of the bank. Okay, that is a concern. Did you know that in Canada in 2013, legislation was passed to make a bail-in legal? So what that means is when you deposit money in the bank, it is no longer your money. You are signing it over to the bank. They are responsible for it. They can do anything with it what they choose until you come back and get it again. They want to withdraw it. Well, in the meantime, if they need it to cover their liabilities, they can do that. So again, a concern about the banks. Need to be informed about those things. So let's talk about our money. And the money that we carry in our pocket really isn't true money like gold and silver have been for thousands and thousands of years. It's called fiat currency. Okay, think of it as a currency. Use the right term. Well, over the history, recorded history, there's been over 3,800 different fiat currencies. Every single one of them has crashed. In fact, the average life expectancy of a fiat currency is between 30 and 50 years. Okay, so you can see right here on the screen, every time a new monetary system comes into place, there's a currency crisis. So if we go back, we've had our existing US dollar for the last 47 years, since 1971. Before that, there was a gold-backed US dollar. Before that, there was the British pound, the Spanish dollar, the Netherlands, Rome, Greece. All these different countries have, at times, been the world reserve currency, or the world that, where things are priced in, and things change. So the US dollar today, being 47 years old and on very shaky ground, well, right now there's a discussion of a basket of currencies replacing that. And in fact, Iran right now is starting to use the euro instead of the US dollar, the petrodollar, backed by oil and Saudi. Those days are changing, and that's going to change things in the US drastically, which again will affect trading partners such as Canada. So really important to understand those concerns as well. Stock market, another big concern is, when the stock market crashes, like times in the past, it affects people drastically. So I want you to understand something here. Here is a picture of the price and earnings ratio. So you see it going up and down. That tells you when the stock market is greatly overvalued and it's time for a correction. Well, here is 1929, Black Tuesday. Well, what happened? It crashed, and it took till 1956, I believe, until it regained that value. Okay, so that's 26 years that people, suddenly had to change their plans because now all their retirement savings. Well, we go to different times in history. This is .com. This is the highest it's ever been, which was really, terrifying for people. Way inflated. Well, today, the price per earnings ratio is higher than it was in 2008 before our Great Recession. Okay, so what that means is that it's way high. Guys like Warren Buffett are holding off purchasing new companies. They're staying in cash. So if you want to follow the big money, you're not putting money into the stock market right now because it's time for a correction. We've had one of the longest bull markets in US history. That cannot continue on for much longer. So again, just one more thing to be concerned about in the financial world out there that will impact most people. One of the last things that you need to understand is because approximately 25% of the population are baby boomers. Those are people born between 1946 and 1964. Might be many of you watching this right now. Is because their demographics lean so heavily in that age group, there were opportunities. So in the 50s, when all of these babies started needing to eat baby food, Gerber Baby Food became a massive company. So that was opportunity, right, for those who saw that ahead of time. Fast food in the 60s, when a lot of these baby boomers started becoming teenagers, a lot of these fast food chains, suddenly massive opportunity, right? If you can get ahead of that wave of baby boomers, real estate in the 80s, going through the roof. The house I lived in with my parents, it increased in value by 400% in just a few years. So there was massive opportunity because baby boomers started wanting to get into the housing. Well, now baby boomers are starting to move into retirement housing. How many retirement housing facilities do you see going up around you? You know what? If that was a place you wanted to start investing, there's opportunity there. You're getting ahead of that curve. Well, there was one piece that many people are missing. Baby boomers are starting to turn early 70s this year. And that is the age when they need to start mandatory pulling money out of their retirement funds. So now we are going to get to the time when more and more money is going to be forced to starting to be pulled out. So at the time that the stock market's at an all-time high is also the time that baby boomers are starting to draw money out. That is going to have downward pressure on a lot of things like mutual funds and stocks and things like that. This is said to be the largest transfer of wealth that we have ever seen. Okay, so if you can remember a portion of everything I've just shared, we're going to get into talking about why this is such a big opportunity. I want to talk with you about a shift that has been happening. It's a shift to the digital world. We've seen the shift of postal mail to email, in the last 20 plus years. We've seen the shift in the video world of now we no longer need to hold the VHS or the DVD, but now we just stream it all online. We've seen the shift in music world. Same thing. We don't need to hold a CD or a cassette or an 8-track because now it's all streamed. But what about the younger generation and their social lives? A lot of their socializing takes place on their smartphone, right? They don't need to be face-to-face. Or what about the information? Do you have a set of encyclopedias or a phone book in your house anymore? Well, no, because we've got this thing called Google. So again, here are opportunities that if you were ahead of some of those trends, there was opportunity there to make a lot of wealth. The thing that is to be of an encouragement to you is that what we're going to be talking tonight is the world of digital money, and the world of currency is larger than all of these other industries here together, combined. Trillions of dollars moves in the currency world every day, and that's what we're going to talk about today. If we look about how the world has grown, the world is over 7.5 billion people today. 53% of those are on the internet. 42% of those are actively using social media. Well, can you believe that 68% of the global population are using smartphones? So the reason this is important is because in developing nations, and this is where digital currency is going to really change the climate there, majority of people don't have access to bank accounts. So they keep currency, their local currency on them, which makes a problem for theft. Well, now, because they have smartphones, they can actually carry an account with cryptocurrency in a much, much more secure way without needing a bank account. So it's helping the unbanked. That is going to be a big, big opportunity and a massive wave for those people who are, again, getting digitized. So let's look throughout history. Where has the most wealth been created? Well, in the most prosperous people across different civilizations throughout history, it's those who've harnessed new technologies, to become more productive, to streamline things, work smarter, not harder. So if we take it back to agriculture, people started using oxen and pulling the plow. They started becoming more efficient than those pulled the plow themselves. Industrial revolution, same thing. Printing press, same thing, right? Making things more efficient. Same thing with the microchip. Again, efficiency, right? Major shifts happening. Well, now we hear this new term called blockchain. It's a distributed ledger. And that is what is behind cryptocurrency. In fact, it's way, way, way bigger than cryptocurrency. Guaranteed, you're going to, whatever sector you're involved with for work or business or whatever you invest in, will be touched by this blockchain. So it's really important you understand that term. And as we dive into the world of crypto, it's important that you understand these terms because you're going to hear them more and more. And again, those who have knowledge and can move forward in strength, you're going to be way better off in an opportunity to create wealth than those who, again, whose heads are buried in the sand. So that's exactly what the blockchain is. It's a distributed ledger that basically records all the transactions. It's done in a peer-to-peer format, so it doesn't need a third party like a bank. A wallet. So if you think about your hard currency right now, it's sitting in a wallet. Well, right now you're going to have the opportunity to have a digital wallet. They're free. But it's software. You can actually have them online, or you can actually pull them offline as well. But that's where you store your currency. An exchange. Same thing if you're familiar with trading stocks. You're going to have an exchange account for crypto, and that's where you can trade crypto for crypto. So for those who want to start getting involved in generating wealth in this sector, you're going to need an exchange account. That's one of the things that I'll help out with. How do you open exchange accounts? How do you get started? All these different things to consider. But these are different examples. Bittrex, Poloniex, those are different, really large, very reputable exchanges. Every account that you hold, whether it's a wallet or an exchange, will have an address. So instead of sending funds using your email address, like an e-money transfer, now you'll have a sequence of characters, 27, 34, even above, just letters and numbers. And you don't need to remember them. I show you how to record them all in safe places so you can use these addresses to send and receive funds. Every currency other than Bitcoin, and there's over 1,500 of them, is considered an altcoin, okay, an alternate coin. And that's an important term for you to understand. Because there's these new cryptos that are coming onto the market, every day there's a new handful coming to the market. Well, before they have their own blockchain, they're referred to as a token. Once they have their own blockchain, they're launched, they're a coin. And then the last term that you need to be familiar with is FUD, because it has tremendous impact on this sector. And that's fear, uncertainty, despair and doubt. That's something that drives the market a lot. Crypto is still a very young market, and rumors come out or fear of, what's happening in different parts of the world, and that drives price. So it's important to understand if you make very smart decisions, then you don't need to be affected by FUD. But the majority of people that get into crypto do so without knowledge or any training or any wisdom, and they get driven by FUD like nuts, and that's the ones who lose money, and that's what I don't want any of you experiencing. So what's happened to Bitcoin? Well, it's gone from pennies when it started in January of 2009. So what happened in the fall of 2008? Well, Great Recession, right? Banks going under, people losing confidence in the banks, people, seeing what happens in Cyprus a couple of years later. Well, here, amidst all of that, this little idea called Bitcoin started at pennies. Well, some of the people, understanding this, got involved, and it went up to over $20,000. So millions of a percent in return over a period of 8 years. So that's pretty good. And it went way too fast. There was way too much speculation. The media got involved. Masses started coming in again without knowledge at a peak in the end of 2017. And now it's got down to a much healthier level, which is really, really healthy for the market. It rose too high. And that's something, again, when you're in knowledge, you can understand the market a little bit. So what's happened in the overall explosion in crypto? Well, if you look at just the last 5 years, we went from a $1.5 billion market cap, so that's the total value in cryptos, and look at where it's grown. It actually hit about an $800 billion market cap, almost $1 trillion in 2017, and now it's come down again. It's probably around 400 billion today, again, which is a much, much healthier growth pattern. But again, the number of cryptos, look how it's grown. And now there's almost 1,600 different cryptocurrencies. This is where I want to caution you. I would say probably about 95% of those are trash, garbage. You know what? Anybody can start a crypto if you've got a little bit of programming experience. You get some of your friends and family and a couple of wealthy deep pockets to put in, and it looks like it has an okay market cap, but there's nothing to sustain it. And that's what's really important. Don't go based on something you see on social media. Don't go based on something that a friend says, oh, look what I heard blah, 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 blah. And I'll give you examples. I do other training, and I give people examples of the ones to stay away from, because you're more likely, if you throw darts at the dartboard on the crypto dartboard, you're more likely to get trash than the real treasure. And that's really important to understand. So how does news drive price of Bitcoin? Well, it all started, again, about 1.5 years after crypto started was the very first crypto transaction. Okay, so usability, keep that name and that word in mind. The very first transaction was 2 Papa John's pizzas, 10,000 Bitcoins. Do the math on that. What would that be? 10,000 times about $10,000, okay? That's the cost of 2 pizzas just 8 years ago. Wow. Then we see other large companies starting to accept Bitcoin. Look at where the price goes, right? You start getting the Microsofts of the world. You start getting countries that say, okay, they start defining Bitcoin. It's a commodity. Some say it's a currency, but they're starting to recognize it. Countries like Japan this last year, declaring it legal tender. So all of these things start driving up the price. It's starting to get recognized by the masses. It's starting to be transacted in business. We see crashes. We see the market recover this last fall. This last year, Bitcoin crashed 6 times. And when I say crash, maybe that was a 30% crash or an 80% crash. I mean, that's normal, unfortunately. And again, why you need to know a little bit of where it's going. China was going to say, we're going to call Bitcoin illegal. Wow, FUD, get out. So people are selling, even though they might have paid, 5,000, they're selling at 2,900. Well, look at where it went. It started rebounding to the point where it hit $20,000. Those who sold in fear, uncertainty, and despair in September lost about 8 times their growth opportunity in the next 3 months. Okay, so that's where knowledge is so important. So let's talk about, how do you create wealth in this industry? Because that's what I'm all about. I want to educate the masses, and being on an educational webinar like we are right now will teach you, how do we do this? Okay, there's the buy and hold strategy. There's mining. There's trading. Referrals, if you love sales and you like getting paid for referring, or ICOs. So let's dive through each of those just a little bit more in depth. So buy and hold. Okay, this is like creating your own crypto fund. Okay, it's kind of like, and I hate to use the analogy because I'm not a fan of these at all, but it's kind of like creating your own mutual fund of crypto. Well, here's Peter Saddington. That's what he did. He did a buy and hold. In 2011, he bought crypto. He watched it. He was just, wow, look at this grow. So this last year, he justified to his wife. He said, honey, $115 of what I put in 2011 is going to get me a Lambo. And in fact, Lamborghini was the first car manufacturer to accept cryptocurrency, Bitcoin specifically. So that Lamborghini cost them $115 in 2011 funds. So the question for you is, if you're just getting started, in the next 6 years, if you just do just a buy and hold, it takes some knowledge up front, a little bit of education, but then it doesn't really take a whole lot of managing and maintenance, and it doesn't become a job. What will that be worth in 2023? Will it enable you to buy a really nice Toyota Corolla or a Lambo? Who knows, right? But this is how you do the buy and hold. Your first step is you have to exchange your fiat currency for Bitcoin, Bitcoin Cash, or Ethereum. Those are kind of the big three that you can get started with. You can do that through an ATM, a Bitcoin ATM. You can Google it, but you can only do about $500 at a time, and exchange fees are quite high. You can try to open an exchange account through a company like Coinbase. Their limits are even lower. Or you can go to a Bitcoin agent, and that's actually something that I do for people that I know, or people that are referred to me. I don't advertise that at all, but you basically send the funds through, and I would exchange directly. And once you have one of those three of the bigger cryptos, then you can start trading for altcoins. And again, remember, 90 to 95% of them are trash. So that's where, again, you're going to want some education, and we're going to give you some direction on where you can get that tonight. Store it in a secure place. Again, what is secure? Again, the further training will go through all that. And then, go back to work. There's really not a whole lot to do. You'll want to get an app called Cryptonomy, and that will track it really, really simply, so you can kind of just monitor where the pricing is going. Not that you're going to sell, and because of FUD, but that's basically how you do the buy and hold. That's really a very common place for most people to start getting into crypto. Mining is how crypto is created. It's really the beginning. It's solving mathematical formulas, algorithms. And if you want to get involved and start buying computer rigs, go for it. That's not an area of my expertise. A lot of people will choose to partner with a company to do that, where you can actually order a mining contract where the company does all the work and you split the revenue. And you know what? That's not a bad idea. Just another way to diversify your Bitcoin or crypto revenue. So buy some Bitcoin, order a contract, pay for it, and you're done. So trading is one that I'm enjoy quite a bit, but again, there's cautions that you need to have. If you're going to hire a trader and they claim to have do a certain amount, they say, hey, we're going to double your money every 5 months or 6 months, be cautious, because what happens is you need to send your Bitcoin to somebody, and there's no way of getting that back. There's no way of getting your credit card to reverse that charge or something like that. You're trusting that person, and there's been way too many scams that I care to think of in this last year of passive trading, of people trusting brokers to do the trading for them. Active trading is you're sitting by the computer, you become an expert in trading, and you're going back and forth. And that's, boy, you need special gifting to do that, because it's really, really technical. But if you want to do that, a gentleman named Chris Dunn does some great training on teaching people how to do their own trading. Or you might want to get software that does trading for you. And that's actually how I'm involved in trading, is I have software, does it automatically, takes very little of my time. So that's a really good way to get involved in trading. It becomes a passive income stream, which is awesome. Referral income, you know what? If you like sales, if you believe and you're passionate about something, you can create an income stream of residual income plus kind of like your own pension fund if you partner up with a company that's involved and they pay referral fees, they pay commission for you referring their crypto. So again, in further training, I'll go into more information on that, but it's a way that can start to create a passive income stream, which is awesome. ICOs is the one that you really want to be cautious of. 46% of the ICOs in 2017 crashed and burned like a jet plane. It was awful. If you look at this graph here, you can see the amount coming into ICOs starting going more and more, to the point that there was more money last summer coming into ICOs than there was traditional called VC or VenCap funding. So on Wall Street, the amount of funds being raised. So the problem is there's a lot of shysters out there that will start an idea of an ICO, an initial coin offering. Okay, so kind of like an IPO, which is what they would call on Wall Street, a company going public. This is taking a coin public, but most of them don't get there. So if you do want to go down this route, a couple quick tips for you. Read the white paper, do due diligence on who the management team is, and figure it. Don't dive in, willy-nilly because someone says it's a good idea. I've done a couple ICOs, 5 of them actually. My very first one still has not gone public. I'm hoping that it does. It should be. I've done 4 others that actually have been quite positive, and one extremely positive, but that's not the norm. So timing. This is why you don't want to do an ICO. If you look at this, it's called the J curve. And what happens at an ICO is lots of hype. Speculators, profit takers, token is far from development, and it goes down. And almost always this happens. It goes, well, now you're in a bit of a sideways market. It's stage 2, the enthusiasm phase, product launch is still pending, the media has moved on, the speculators have all cashed out. This is the time when you want to invest in that crypto. As long as you've done lots of due diligence, before it gets to that point right there, and boom, it's through the roof. It's lower risk and often greater return. So here's an example. This is one that I recommended in a course that or a class that I did just like this right now. I recommended this last October. It was called EOS, and it went through the roof, came down. They're figuring stuff out, going. I recommended it right here at about 56 cents. Today it's about $20. Okay, so that's in 6 months, 56 cents to $20. That is a crypto story that you want to tell. So this one here wouldn't be one I would recommend right now. It's much too high over the buy-up price, but there's other coins that I recommend that are still below the buy-up to price. Here, if you look back over the last 6 years, you'll look at what has Bitcoin done compared to other asset classes. Can't even compare, right? US equities in the traditional market will be the best thing that we've seen, and Bitcoin still outperformed. It's still not something you want to dump too much into because it is higher risk, but it's something you definitely want a portion of your net worth in, a smaller portion, mind you. Don't go put money on a credit card, don't leverage. You need to be very wise in how you enter into this, and that's also something that I help people out that I do consulting with. I'm going to fly through this really quick. These are all returns that different cryptos had last year. These all happened in a 1-week period. Too good to be true? Yeah, it kind of looks like it, but this is historical. This happened. So can it happen again? Well, they're calling 2018 to be the year of the altcoin. So we are going to see some incredible growth this year. And the things that are happening, I want to go through and just share with you a few things that are coming up. And you'll have an idea when you've missed the boat. Right now, you haven't missed the boat. It may feel like it, but when you start seeing countries declaring crypto as their world reserve currency, like Argentina's, considering right now, that's a big thing. When you see businesses, McDonald's has talked about accepting Bitcoin this year. We're going to see a lot of businesses starting to accept crypto. When you see that happening, that's a big thing. Banks, when you see banks jumping on board and going, wow, this is a big deal. You know what? Yeah, you see all those things and they're happening, you may have missed the boat. So let's look at another stock. And just to give you an idea, because Bitcoin is volatile and people sometimes get concerned about that, look at what the stock did between 1999 and 2001. Up, and then it just tanked. It was a new industry. A lot of people, even those watching, would have gotten freaked out. FUD, I'm gonna sell. They get out. Well, look at this stock. It's one called Amazon. It was a newer industry, right? Had a lot of volatility back here. But if you would have held on to Amazon, in fact, I just read that Jeff Bezos has another several $1 billion of net worth because of where Amazon stock has gone in the last couple of weeks. So newer industries can be very volatile, but it doesn't mean that you need to jump out. It means that you probably need to hold on tighter. So why 2018? What is happening? Well, the Securities Commission and the futures trading commissions, they are working diligently right now to tighten the ship. There is some massive regulations coming down right now, which some people in the crypto sector don't like, which I understand because it's there to, for more privacy, and it's there, so that the banks, you can have a little freedom from the banks. So those are all great things. But this regulations are important because it's starting to pave the road for the big money. Okay, if you can get into something before the big money gets in, the institutional money, which demands more regulations, that's where you see massive growth. And right now, many cryptos They won't survive without that. When that regulation comes in, a lot of those cryptos are going to die off. They aren't going to survive under that scrutiny. So that's where a lot of that 95%, a lot of cryptos are going to fall by the wayside. And that's why you got to be careful what you put your funds into. But right now there are formal discussions happening to put in lots of regulations, and that's going to pave the road for the big money. And that's why there is a second boom coming that will knock your socks off. The big banks right now are lining up to get into crypto. And the reason why crypto is of such interest is because it isn't correlated to stocks and bonds and things like that. So for a financial advisor to put maybe 5% of somebody's portfolio into crypto, that lowers a client's volatility. That's a really good thing. But they can't do that until the infrastructure is in place. And right now, they are putting what's called institutional grade custodians in place. There's banks doing that. Goldman Sachs, one of their subsidiaries, just bought Poloniex, which is one of the largest crypto exchanges, and they are going to make it the first securities compliant exchange. Other crypto exchanges are putting Bitcoin trading desks, or banks are putting crypto Bitcoin trading desks in place. Cryptos are getting their own custodians in place. This year is when the switch flips. And we know that because, again, just like we used Buffett as an example, Warren Buffett as an example, we talked about following the big money. Well, big crypto money right now, a lot of it are giving us signs that they are preparing for a massive year in crypto growth. So if you were to compare where the crypto era is right now compared to the internet, we are in 1995 right now. So internet really got started in 1992, and it really started getting a lot of traction because of the institutional acceptance. Well, that's where we're at with crypto right now. We're in the 1995s of the internet. It is the timing could not be better. People have not missed the boat. So what you need to do is you need to focus on the 5%. Usability and utility, okay? Those are the two words I want you to recognize, and I want to give you a couple examples. These are little freebie tips. There's a crypto, and this is actually one of the ICOs that I did called ProCurrency, and it is positioned itself to become the e-commerce crypto. So for online purchasing, usability, wow, they're opening up their own online mall to compete with Amazon and Amazon pricing. So that's a great example of one with a lot of usability that's still under the radar. Utility, there's coins like Civic or Pivx, that are addressing things like privacy and security. They're not ones that are going to be used for online commerce, so like a traditional currency would be, but have tons of usage and they're addressing problems. And those are the two things you want to focus on with choosing a solid crypto. Either it addresses an issue out there in the marketplace and it's solving a massive problem, or it's going to be very usable, or it's both. So in wrapping up the class, so what now? Where are you sitting after all the information I've dumped on you? It's so much to consider. I understand that. Who are you in this picture? Are you this fella here, head buried in the sand, working harder, not smarter, forging forward? I'm busy. I'm way too busy, right? I hear a lot of people saying that. I can't learn something new. I can't focus on this. Or are you still on that train a little bit, but at least you're acknowledging that there's something else out there? You know what? Maybe, I don't know, not right now. But you're on the path. Maybe you're considering. Or are you this fellow right here who's going, you know what? I've got something better. Well, if this is where you're at and you're saying, you know what, I recognize that this is a very, very big opportunity. I've got a special offer, and it's something that I really don't like to advertise because I can't do much of it. But it's a coaching that I do, and I really only do it for friends, family, or somebody that has been referred to me. And what I've done is I've taken the hundreds and hundreds of hours that I've poured into becoming an expert in this space, and the thousands of dollars that I've spent in subscribing to some of the best crypto researchers out there. So I have, basically a list of the top cryptos to invest in. What I've done is I've put together coaching, and I do a little bit of one-on-one, and then I also do some group stuff as well. Intro, I've often done one-on-one. I've charged $200. It's about a 60-minute one-on-one on the webinar, and I get you all set up, showing you how to open wallets, get secure, open exchanges, get started, give you some direction. The advanced is showing people how to start trading. and how to start building your own crypto fund. And it's actually a recorded class that I've done that I can send everything out. There's also going to be a fee attached to that. A couple factors, you'll have to contact me for more details on that. And then I also have, one-on-one time after that to help address questions. But I tell you, you know what, a year and a half ago, if I would have had somebody offer me this, knowing what I've done now to get to where I'm at, hands down, it's a no-brainer. So you know what, I want to leave all those things with you. If you've got any questions on crypto and we have not met before, get back to the person who invited you. Get your questions answered. Don't be like this guy here and go, I'm too busy, I don't want to look at the wheel, right? Make sure you get your questions answered. Timing is everything when it comes to business, and now is the right time to get started in crypto. So thanks so much for taking the time to join me for this webinar. I hope that it was intriguing and not too informative. And yes, I am an optimist, but I am being realistic here. So thanks so much, and God bless.